assignment for this strategy unit. Okay, we're going to be going into exactly what's involved in these different sections here. Last week we covered that. This week we're doing marketing and operations. Then next week we're going to do finance and the conclusion, which will be the remainder of the assignment. Does everyone in the groups know who's going to be responsible for these sections? Yes? You guys are aware of this? Okay, you might want to pay particular attention. Feel free, if you want to record this, to do so. What I'll probably do though is this video that I'm doing now, I'll probably share a link for it up on the site, so if you want to watch me going over it again, then you can. So as I mentioned last week, with each of these sections you need to have a short introduction to introduce the section, to say what's going to be in the section. Okay? Later on today I'm going to, as I said I would, I'm going to show you guys a recommended table for the key objectives that I discussed last week. But let's get into the marketing section first of all. So, couple of line paragraph, 2 to 3 lines, not too much word count, where you explain what's going to be in the marketing section. Okay? This is a mini marketing plan basically. First thing you're going to look at is a positioning strategy then for your hotel. So this is where you would utilize again theoretical models to identify the best strategy moving forward. Okay? So it's not just saying paragraphs are writing, this is what we think we should do. So if you are doing positioning, what sort of marketing theory might you think might be relevant to identifying your position in the market? Try and think of some theoretical models from doing marketing that you think might be useful.
The B's?
Yeah, great. So the marketing mix, right? That's one of the things. Now, if you're going to use marketing mix, and it is definitely positioning, because this is how you're going to position yourself with your segments, right? But if you're going to use marketing mix, whether you do the shortened or the extended version, obviously because it's a service-based product, the extended version is more relevant, okay? Which is price, place, product promotion, packaging, physical evidence, partnership, and people.
Do you want us to do all of that?
Yes. If you're doing it, I'm recommending you either do, now, it depends where you look, you've got 4 Ps or 7 Ps or 8 Ps or sometimes even 9 Ps, so I don't mind which of those you choose, but my recommendation would be, if you just do the 4 Ps, it's not really comprehensive enough, especially when you're talking about customers in a hotel. Okay? But the marketing mix on its own is not positioning. Okay? It's only when you do it in combination with segmentation that it becomes positioning. So what I would recommend you do is maybe have 2 segments, primary and secondary segment. You could do this in table format, say for example, where you've got segment 1, international tourists. Okay? Then you've got sections, demographic, geographic, psychographic, behavioural characteristics. Then next to that you've got the marketing mix. Okay? Price, place, package, promotion, people, physical evidence, partnerships, and packaging. Did I say package? I think I said packaging. Physical evidence, partnerships, people, and the other P, which we'll come back to in a second. So you've got your 7 or 8 Ps down one side, you've got your different areas of segmentation, your criteria for the segmentation, demographic, geographic, psychographic, behavioural characteristics on one side. Then you've got your secondary segment, whatever that is, local business travellers, say for example. Okay? And again, you've got your demographic, geographic, psychographic, behavioural characteristics. You've got your packages, partnership, physical evidence, people, price, place, product promotion. Got them all. Next to it. Now, the whole thing about the marketing mix, which makes it such genius, is the fact that it is contextualized, tailored to each of your different segments. That's why it's not a positioning strategy unless you're changing it and tailoring it for each of your different segments. That's when it becomes positioning, right? Okay. So if you're going to use it in this context where you discuss positioning, you have to do that. Now, that doesn't mean that every single element of the marketing mix should be different for both. Some of your elements might be the same, but some of them should be different. That shows how you are positioning. Now, there's another renowned strategy, and the clue is in the title, that you might use, theory that you might use from marketing to discuss your positioning. Anyone guess what that might be? You guys heard of positional maps? Okay, so So positional maps is another one that you might use. A positional map where you've got the cross like this, okay? You've got, say for example, you can put anything on the two axes, but you've got, say the obvious one is price versus quality, okay? So price versus quality, and you have mapped out the starting place for your local competition here and maybe some of the other hotels in Bondi.
And we use the hotel index for that?
No, well, you use basically analysis. So you're analysing. Now, all of you guys are going to be starting in pretty much the same place. So you can group the hotels together from here to represent that. Low price, low quality at the start, right? Okay. But then you're going for different markets from that point. So you've got a starting point. And to make the chart more interesting, you might want to look at 2 or 3 of the major hotels in Bondi and try and figure out where they are on that graph. Okay. And then you've got the finishing point, which is where you are at the end of the 4 years. What you can do, if you want to do this quite comprehensively, is say, this is where we started, this is where we intended to get to on this positional map. This is where we were moving ourselves to position ourselves, and this is where we actually got to. Okay, maybe it's the same place. Okay? So that's positional map to show your strategy. Now, what you might do is something like classic versus contemporary, and on the other side you might have low touch and then high touch. Okay? You can choose any 2 things on those axes. If you're looking at these in proper marketing reports, you'll see 6 or 7 different options here, different varieties here. And the reason they're called positional is because you're showing where you stand against your competitors. You're identifying who your local competitors are, I mean the ones closest to you in what they do, and you're identifying also what are called gaps in the market. When people say gaps in the market, they're talking about gaps on those positional maps. Okay? That's why you would use those. So I would have maybe 4, and what I mean by 4 is you've got a starting and a finishing for one and a starting and a finishing for another. Okay? If you look on Google and just Google image search positional maps, okay, then they'll come up, marketing positional maps. All right. Then you've got your pricing tactics. Now this is straight out of the text for this unit, and we discussed it in class. Different pricing strategies like penetration pricing, market skimming pricing, psychological pricing, etc. Okay, so I expect to see your strategy in pricing for your products. Okay, and this is not discounting. This is just your general strategy in pricing here, what you intended to do across the 4 years. A bit of a discussion of it. Obviously using the theory that we discussed in class and any other theory that you want to make relevant to this. Okay, now we start to get into the interesting stuff. This is discussion of performance and plan. Okay? This is where instead of giving me paragraphs of writing, I want you to be smart and use diagrams. Okay? So, the diagrams that I recommend you use, and I might also try and show you an example of one of these that I made last term that I think would be useful. But the way I would represent this, so if I'm trying to show that I have performed well, what am I trying to show that I've done? If I'm saying as a manager or as a general manager, CEO of a company, and I need to show good performance, what are the 2 things that I need to show?
Revenue.
Overall, what am I trying to show?
The position of the hotel.
No,
Market share.
no. More esoteric than that. Just generally, what am I trying to show? That I have been,
A good manager.
in what way? I have been efficient and I have been effective. Okay? Those are terms that are thrown around, but they've got very different meanings. If you're efficient and not effective, you haven't achieved what you tried to achieve. If you're effective but you're not efficient, then you haven't achieved what you intended to achieve. As a manager, I've got to show that I've been both. I've been both efficient and I've been effective. Okay? And we're going to apply that logic, or my recommendation is that you apply that logic to each of the different areas of performance here that we're going to discuss. And I'm going to show you guys a nice simple way of doing it. So you need to build the argument as quickly, as simply, as plainly as possible that you've been efficient and effective. That's how you show good performance, right? Okay? So for example, appropriate advertising expenditure. How would I show that I've been effective? What numbers do you have available to you that show the effectiveness of your advertising?
The hotel, I don't know.
The awareness.
The
The-
public awareness.
So
So the other stuff like market index, yes, it's somewhat related to it, but it's not only related to it. So that doesn't show just advertising, but public awareness does. That specifically relates to your advertising. So if I can show year naught, okay, because you always show the year before because it's going to make you look good, okay, year naught, year one, year two, year three, year four, and then dot, 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 year five, year six, okay, that's my plan for the next 2 years, then there's a line going up, good performance. Okay, I've been effective.
But we need to say the strategy for the next 2 years, right?
Well, so what you do is you do it on a graph and then you do the lines and then you show where you're intending to go.
Just,
Well, you do that and then you can talk about it in bullet point underneath. Okay? But you do that in the graph. So I can see as a manager, as an owner, I can see a visual representation of your intentions. Which is it's much better to do that than give me 2 paragraphs of writing. Okay? So I've got that line moving forward after the 4-year point, but I've got on that graph I've got 0, 1, 2, 3, 4. Okay, so before you took over, the 4 years you ran it, and now you project into the next 2 years. So that shows that I've been effective, right? Hopefully. Highest you're probably going to get on that is about 52 to 54%. Hopefully you guys are improving year on year, even if it's only a slight line upwards, that's fine. Okay, reached an optimum level and then improved at a fraction each year, that's fine. So now that's effectiveness, how do I show efficiency? Now think about this is a smart one. Let's see who's intelligent here. How do I show efficiency? Efficiency is doing more with less.
Showing our expenditure versus the revenue,
Fantastic.
the GOP.
So, not GOP, so advertising cost as a percentage of revenue decreases. Not just the dollar value, because that's not comparing apples with apples. If the revenue changes, then it's not fair to compare one against the other. So we turn it into a percentage, right? So advertising cost as a percentage of revenue. If the cost as a percentage of revenue goes down and the public awareness goes up, then I've been both efficient and effective, right? And if I'm, if say you're the advertising manager and you're talking to me and I say, you haven't done a good job, and you say, well, I've done more with less. I've been successful in increasing the public awareness, and I've done so with less and less of a percentage of budget each year. You're saying I've been unsuccessful, but how can you say that when that's the case? That's a hard argument to argue against, right? Okay? And if I'm the owner and I see that, I see efficiency goes up, effectiveness, the costs go down, then before I've even finished looking at the graph, I have confirmation that you've done a good job. That's good report writing, right? That's what you do. And then you give me some bullet points underneath. So once you've done that, then you've got bullet points probably separated into 2 sections, performance and plan, where you give me 2 or 3 bullet points that discuss the performance. Public awareness went up quite dramatically in the first year from this to this, as higher investment was put into the budget. Okay, it then somewhat evened out over the next few years, but still continued to rise at a rate of 1 or 2%. Okay, something like that. Then you've got your plan section. Plans for the next 2 years are realistically only to be able to make small gains, but the intent is to raise public awareness from this to this. Okay? And that's all you need to do. You don't need to give me paragraphs of writing or go into it more than that. That's why the word count's not so much of a problem. Because if you're smart in the way you write, you're not using loads of word count. Okay? Now, we're going to use that same logic, that same model that we just discussed, a few times in this report. Efficiency and effectiveness. Okay, so moving on to the next section of the report. So now we've got appropriate promotional campaigns. This is your discounting. Okay, this is your 3-room stay, your no breakfasts, your non-cancellables, your weekend discounts for your events and for your conferences. This is also the discounting that you do on that second page, the revenue management page, where you're discounting in late bookings depending on occupancy, where you're giving the merchant websites discounts. Okay? whether you're doing the opaque rate discount. Okay, that sort of discounting, this is what you're discussing here, and you are trying to show me there was some method behind your discounting. There was some strategy there that you were applying. Okay, so just explain, give a few examples here. Okay, this is what the intent was, this was the outcome. You can use graphs and charts here if you feel they're appropriate, but you're just trying to show me that it wasn't just random or guesswork. You're trying to show me there was some sort of strategy. Now, for some of you guys, obviously, it might have been random guesswork, but you are retroactively applying your logic to a certain extent, and in the real world you would have had a lot more time to plan, and then you would have had literally 4 years as you were moving forward. Okay, so you're trying to present a report as if you had that time, and you had the time to plan and come up with something consistent. So then that is your your marketing section. Anyone got any questions about the marketing section? No?
Do you
Cool.
want numbers inside of our
Charts,
yeah.
the graphs. Yes, and I'll give you examples of them. So I will show you an example, because obviously when you're doing the graph, for each of the points of the year, they're different matrices. So the way you have the graph is you have it like that. And on one side you've got so public awareness percentage, and then on the other side you've got cost of revenue percentage. But the cost of revenue percentage, you're not going to have it out of 100. You'd maybe have it out of 30. So that the lines are more like that. And then on the other side you've got public awareness, might be out of 100. Okay, do you see what I mean? So then you've got the points along there, and then you've got a small table underneath the graph maybe that gives me the numbers so I can see them. Okay? Again, I'll give you guys an example of this because I did make one last term. All right, so now moving on to operational management. Interpretation of operating results for the last 4 years. So you have a small, maybe 2-paragraph introductory section that talks about general operations. Okay, so generally what do you think operations is in charge of? If I'm the operations manager of a place, and I was the operations manager of quite a large venue, what's my main responsibility?
Take care of food and beverage.
Okay, I'm not talking a list of jobs, just generally, like efficiency and effectiveness for managers, what's my overall responsibility?
Manage cost and
Staff satisfaction?
To a certain extent, yeah, but overall, so managing costs and quality of the product. Okay, those are the two things that I'm primarily responsible for as the operations manager, right? Okay, so you're discussing overall cost and quality here. This is a general discussion of things like guest satisfaction, hotel quality index, okay, GOP, net profit percentages. General discussion here. Don't go into it in too much detail because a lot of that stuff you're going to talk about when you get to the financial section, not the quality aspect, but the cost aspect. Okay, but in these first couple of paragraphs, you're just going to generally discuss your overall operating results, so how well you've done for the last 4 years. Okay, these might relate back, and this is what I said about relating backwards and forwards to some of your key objectives here. Okay, so you shouldn't have different things here than you've got in the key objectives there. So there needs to be some discussion between the people who are doing those sections. Then we get on to appropriate staffing levels. Now this is similar to this. So how are we going to show appropriate staffing levels? What do we need to show again? If we're showing that we've managed our staff well, what do we need to show?
turnover,
Yes, staff satisfaction.
labor cost.
Efficiency and effectiveness. Okay, efficiency and effectiveness again, right? So how do we show, first of all, effectiveness? If we've managed our staff well, okay, then thank you. Nice and simple. Staff satisfaction. So staff satisfaction goes up, then we have been effective at managing our staff. Especially in hospitality, even more than other places, because hospitality, we need happy staff. Because there is emotional labour involved in hospitality. We need them to be happy because they are working with customers, and we need them to be happy when they're working with customers, right? That's our role as a part of our role as an operations manager, to make sure that we've got happy staff. Okay? You couldn't tell this from some hotels, of course, but that's a big part of our role. So we want to see that staff satisfaction going up. Year 0 to year 1, 2, 3, 4 continues to rise. This is why I'm saying with your staff satisfaction percentages over the year, okay, then then you want to try and get 1 or 2, 3% per year. Even if that line's just going up a little bit, it's fine. Even if it flat lines, it's kind of okay if it's high. Okay, what you don't want is that. You don't want it going down. Okay? Now, why wouldn't we show turnover going down? Just out of interest. So we've got the option, we could do one or the other. Why wouldn't we show turnover going down in this circumstance? And you can do, but why?
No, it's not
So
relevant
positive.
for-
Well, it kind of is. It kind of is. It's representative of the same thing. You're happier staff, you've got lower turnover, right? It's a stupid thing, but it's true. If it's good, it's better to show a line going up. Okay? If it's good, it's just better visually to show a line going up than going down. Okay? So if we can show a line going up, great. Okay? So we got effectiveness, staff satisfaction going up. How do we show efficiency?
Nobody left the company.
No, because we've kind of shown that already. So that's the turnover thing. That's the effectiveness. How do we show efficiency?
Not increasing costs.
Sorry?
Try not to increase.
Well, what's better than not increasing?
Training?
Huh?
Training?
Reducing.
Thank you. So reducing. So when I say reducing, again, we're measuring it the same way as we did before. We want to measure apples with apples. Okay, compare likes. So it's unfair if the revenue is going all over the place if we just take a dollar amount. So we do it as a percentage of revenue. So staff cost as a percentage of revenue goes down as a percentage of revenue. Staff satisfaction goes up. We've done more with less. We've been efficient and effective. Okay? Someone says you're managing staff terribly well. The satisfaction's going up and the staff cost as a percentage of revenue is going down. How can you say that? Then I've just put the weight on them to prove that I'm managing the staff. You know, otherwise it's a you said, he said situation, right? Well, I've spoken to staff and they think you're a bad manager. Well, that's not what they're saying in staff satisfaction surveys. Okay? And I'm doing more with less. I've reduced staff costs. Okay? Now, hopefully you're not going to have to defend yourself that way. But even if you want to go in and say, someone says, look, how are you going with staff performance? Well, staff costs have been going down as a percentage of revenue and our staff satisfaction's increasing. Bang. There's your argument made for you, right? Very hard to disagree with that. And that's the kind of argument you've got to be able to build in these reports very quickly to convince people to take action. Yeah? So, with your appropriate staffing levels, you're showing same sort of graph, staff satisfaction goes up, staff cost as a percentage of revenue goes down. Show your plans for year 5 and 6 in there as well. Be realistic, don't have them like this, okay, or like that, okay. 2 or 3% ups and downs at that point in time. Once you've been running a place for a while, it's very hard to make big chunky gains. Okay, several percentage points. You're going to be making 2-3% improvements per year if you're doing well. Now, staff training. This is a little bit more complex, but we're going to still continue to apply the same logic. So how would we show that we've been efficient and effective with staff training? By the way, sorry, staff numbers. Okay, we've got our graph. We've got a table underneath it with the numbers in there. Okay. Then underneath that we've got a section that says performance and a section that says plan, 2 to 3 bullet points in each of those discussing the performance and discussing the plan for the next 2 years. Okay, just highlighting. All you're doing is you're saying this is what you should be seeing in the above graph in nice, short, sharp bullet points. So I know what I should be seeing and taking away from it. You're not making me guess. You're not making me figure out what I should be seeing. You're doing the work for me and saying this is what you should be seeing. This and this and this was good. Okay, now, important thing here as well, if something's bad, it's an elephant in the room, so own it, right? Something's bad, if it went like that and then goes like this, you say in year 3 the staff satisfaction went right down. This was probably due to this. However, corrections were made in year 4, the staff satisfaction at least went up another 10 percentage points from that. So you own it. If you're not owning that and it's glaringly obvious to me as the person who's reading the report, and you don't mention it, I start to trust what you're saying less. Okay? So it's very important when you have things in reports that are bad is that you own them. Okay? Own them, talk about them, get them out of the way, and then a person makes a measured decision, but at least they continue to trust what you're saying. Okay, so now moving on to staff training. How do we show efficiency and effectiveness in staff training? Using the same logic we've been discussing up to now, how do we show efficiency and effectiveness in staff training?
High levels of the staff satisfaction again.
So let's go effectiveness, staff satisfaction, why do we train our staff? So they're happy?
Yes.
Guest satisfaction, okay. So in this case, I would argue guest satisfaction is a better measure. So if guest satisfaction's going up, okay, then how do we show efficiency?
Reducing costs of training.
Thank you, fantastic. So staff training as a percentage of revenue goes down. We're doing more with less. Or we're doing the same, we're doing more with the same, okay? Even if that's kind of flatlined, it's okay, and that might be the case for some of you guys. Okay? Now the thing is though, the more revenue you make, the smaller percentage those variable costs become of the revenue. That's just the way things tend to go. And you guys will probably get busier and busier and make more and more money. Well, you've got to be a little bit careful about doing things like adding loads of rooms, because that can stop that happening. Okay? But hopefully your graph should look something like this. Okay, where you've got that guest satisfaction going up, staff training costs as a percentage of revenue going down, you've got the years 0, 1, 2, 3, 4, and then projections for 5 and 6 in there. Then you've got your little table underneath with the numbers, then you've got your performance and plan sections with 2 or 3 bullet points in each. Okay? All right, then we move on to refurbishment program. Now this is a little bit confusing, because when we say refurbishment here, what we mean is the addition of areas to the hotel. So this is adding your conference center, adding your gym, adding your shop, etc. Okay? So here you are discussing and justifying your strategy. What I would expect here is not justification for everything you've done. It's too much for this report. But at least justification for 1 or 2 of the things that you've added. The most obvious would be the conference center. That should be a very easy one to justify. Okay, cost this much. So what sort of thing might you use to show justification for the addition of the conference center?
The business demand in the area.
Think about it from a financial perspective though. I mean, you've done it, so you've shown that it was a good, smart move. How do you do that financially?
Compare the revenues for 2 years.
Yeah, we don't even have to do 2. You can go, okay, look, over the 4 years, here's a cost-benefit analysis. So here's how much it cost, here's how much it made. Okay? As long as that's in the plus, you're justified. Very simple.
Again, in a graph.
Well, I wouldn't do it in a graph, I'd just do it in a simple P&L. So P&L format, profit, cost-benefit. So here's the cost of it, here's the revenue that it's made, here's what's left over. You want to be ready for Stydius, and you might have to make up some of these numbers to get the percentages right, but you could do a net profit versus cost perspective, which would be the right way to really do it. Okay? But it's not like, and remember this, and this is a point you should make, it's not like the cost of the conference center has gone, been spent and disappeared, it's just moved into the asset column. Okay? So you've moved it into the asset column, and then you've also made this amount of revenue. Okay? So, you might do that, you might do, I don't know, you might, some of the other ones might be a little bit harder to justify.
The leisure club is justifies.
Sorry?
The leisure club.
Leisure club will be a hard one to justify. There, you might just discuss the fact that you had to add the leisure club to bring the star rating up.
You can also show the guest satisfaction.
You can, absolutely, yeah, if that's very clearly correlated. What might be a bit easier is something like the addition of restaurant seats or the addition of rooms. Because you can actually identify to a certain extent the revenue that's come from those areas, and then you can do a cost benefit. To do numbers is much better than kind of softer areas. If you can show here's financial gain, then that builds a much stronger argument. As the owner, you know, for me, to be honest, I want my guests and staff to be happy, not because I care about my guests and staff. I might care about them, but I want them to be happy because I want a good business. I want a strong business, and I know that makes sense. Okay? So therefore, if you can show stuff in numbers, it builds a stronger argument because it makes the financial argument. So then you've got a maintenance program. This is your refurbishments. Okay, this is when you've refurbished, whether you've let it go down to average or poor before you've refurbished, or if you've refurbished each time it's gone down to good. What was your strategy? This is just a paragraph for writing, basically.
So
Okay.
it's just the previous 4 years, right?
This is the 4 years that you've run it, and you can discuss the next 2
The
years
next
moving
2 years,
forward. Yeah,
yeah.
yeah. You can discuss. I mean, what you can say is, obviously, you've had a big chunk of cash sitting around. Probably by the end of this, most of you guys will have about, as much as $8 or $9 million sitting there in your, if not more, in your working capital. Now, usually a business wouldn't have that, okay? But you can just write that off with a very simple line where you say the working capital was intentionally allowed to build up to allow for the purchase of a second venue. Nice and simple, okay? So, these are nice healthy treasury. Okay, then we move on to maintenance programs. This is the refurbishment, so like I said, just discuss in a paragraph what was your strategy here and how does it correlate to your overall vision for the place. If you're intending to be luxury 5-star and then you said, well, we've allowed it to go down to average before we've refurbished, that makes no sense. Okay, but if you say, because we're a 5-star venue, high class, obviously we've ensured that the quality of the venue has remained as impeccable as possible, therefore whenever the room status has gone from excellent down to good, it has been very quickly refurbished, unless it was the busy periods, in which case, to avoid guest dissatisfaction due to the refurbishment work, this was delayed until the end of the busy period in April, for example. Something along those sort of lines. Any questions?
How did you demonstrate in the assignment? Because, for example, we started as a 3-star hotel and then we've expanded.
Yeah.
So initially the vision was not to be a 5-star, it was just to be a good hotel within the 3-star range.
Yeah.
But then as we move forward, we gain the revenue, and because of the guest satisfaction, the reviews we got with, and the money from the money we got, we started to expand.
You justify your change in strategy. You own it and justify your change in strategy. So you say the initial intention was to do this. This was identified, way to do this is talking the third person rather than the first, right? This was identified by this point during the management of the hotel to have been an okay but not the best possible strategy. At which point new strategy meetings were held and the mission and vision of the hotel was somewhat changed to this. This new strategy, which was considered to be a more profitable and successful potential strategy.
Do you also have to show the change in the market over the period of time? We might have reacted to what the market has been
You
doing.
could discuss it. Yeah, you can discuss it. I wouldn't get too complex.
Yeah.
Okay. Any other questions? Yes.
Dr. Rupo, you told us that you are going to show
A table, yeah, a table. I'm going to show you that, and I'm going to show you a graph. I will do that in about probably 20 minutes.
Okay.
Okay. Any other questions? All right. Thank you, sir.